We've been covering Asterdex for quite a while on this channel. The asset continues to outperform, and parts of this is actually fundamentally driven, but parts of this is also hype. Let's have a look at the on-chain data. Let's have a look at the data most people aren't considering to try to figure out how much longer this rally can last and whether or not Asterdex is still a good buy now. So in the last week, we went up by more than 2,300%. We are currently at $2.07. But there have been two videos published before that rally. So the recent one is 3 days ago, and here's another one 5 days ago. At the time, we were still at 60 cents, and again, now we are at $2.07. So if this is your first time to hear about Aster, then feel free to subscribe over here. I publish videos on various altcoins early on this channel. Now, we've talked about the fundamentals of the project in prior videos on this channel, so we're just going to summarize it over here. Asterdex is a decentralized finance platform to bet on various cryptocurrencies with leverage. Now, there are several of those platforms. The leading platform is Hyperliquid. Now, Hyperliquid is several times larger than Asterdex, but Asterdex does have a few differentiators. For example, it allows for higher leverage. There are some assets that can be bought with up to 1000x leverage. There are also products that are not offered on Hyperliquid. For example, betting on the price of stocks, of stock indices. And then there's also the backing by Binance, or CZ by Binance. So we've got a differentiated product with massive backing, and all of that is creating a ton of excitement. Have a look at this. This is the capital that's currently locked up in Asterdex. The TVL jumped massively from 366 million to currently 1.7 billion. Now, it's not just the capital that shot up, it's also the trading fees. This used to be just at around $300,000 or so per day. Now it's at around $7 to $8 million per day. The revenue shot up in a similar manner, and compare this with Hyperliquid. Here we've got 6.5 billion of TVL. So Asterdex isn't that far behind anymore. Now, in the prior video, we already made that comparison of Hyperliquid to Asterdex. We checked what's currently the TVL, so the capital on the platform, relative to the market cap of the token. And at the time, Asterdex was slightly overvalued, as in 30% more expensive than Hyperliquid. But that slight higher pricing was definitely justified because of the additional upside potential. What kind of ratios can we calculate now? Asterdex has a market cap of 3.4 billion. Hyperliquid has a market cap of 12.2 billion. Let's make the comparison. So we've got the TVL over here. We've got the market cap over here. The ratio is over here. So the ratios are very, very similar now. Asterdex has a ratio of total value locked to market cap of 0.50. Hyperliquid has a ratio of 0.53. So Hyperliquid has more TVL relative to the market cap, slightly, which thus now leads to Asterdex being slightly undervalued. Before we had a 30% premium, now we've got a 5% discount. And so the fundamental question is, will Asterdex now continue to outgrow Hyperliquid, or is this just a short-term capital injection that afterwards will fizzle out again? The market currently is anticipating rather a fizzling out, as in Hyperliquid might outgrow Asterdex. This could be a potential opportunity. Let's have a look at the on-chain metrics. So we've got 56,600 holders of the Aster token on the Binance Smart Chain. And what we see over here is the number of small holders, medium-sized holders, and large holders. So to be counted for the chart on the left, a wallet has to hold at least 500 Aster tokens. So at the current price, it's roughly $1,000 worth of the token. In the middle, it's $10,000 worth of the token. In the right, it's $100,000 worth of the token. All wallet cohorts continue to accumulate the Aster token. So this is very positive. But of course, now we've got all of this attention because the price is going up. And the price is not just going up because it's getting purchased on chain. It's also going up because the people that get into Aster use leverage as well. And that's the potential danger. What you've got over here is the open interest weighted perpetual futures funding rate. So whoever now buys the Aster token via just bets on the price, via the perpetual futures, is paying a funding rate. The longs have to pay the shorts in order to get more price exposure. And the open interest is growing over time. So there's more and more bets on the price. And because of that, at least partially because of that, the Aster price is also going up. So all of this short-term leverage in the price is pushing up the market cap of Aster. But we've already established that the market cap of Aster relative to the TVL isn't really that high. Still, we're looking at roughly 1 billion of open interest on Aster. That's almost a third of the market cap. Compare that with Hyperliquid. Over here, we've got 2 billion of open interest, but relative to the market cap, it's not that much, right? 2 out of 12 is much less compared to 1 out of 3. And again, have a look at how much the open interest correlates with the price. If suddenly there's less open interest on Aster and the leverage would exit the asset, then the price could come down as well. I don't expect this to happen tomorrow. I still think, given the massive backing by Binance and given the positive momentum of the platform, that the current valuation isn't yet too high, but it's definitely something to watch. As there's more and more bets on the Aster price, the risk of a potential very quick drawdown also increases over time. Now here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fun traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost average into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient. But it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders and the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here, but long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those 2 videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you will just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the 2 that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.